Welcome to Not Milk Never Milk. Subscribe if you're lactose intolerant.
You begin by locking down the essential prerequisites: a brokerage account, a simple watch list, and a learning schedule. Open a low-cost account and fund a small amount. This reduces friction. Once done, start paper trading immediately to practice order types and timing without risk, then place one small live trade to experience fills and fees. Make sure to track each trade in a simple spreadsheet so you understand how execution, commissions, and slippage affect real returns. Now you move into the complex middle: analysis and disciplined execution. Learn one technical setup and one fundamental filter. Practice them until your edge is repeatable. Once you have an edge, size positions using a fixed risk percentage per trade and always place stops. This controls drawdowns. Make sure to create a routine. Pre-market scan, confirm catalysts, execute with limit orders when needed, and perform an end-of-day review to learn from entries, exits, and missed opportunities. To finish, focus on scaling and continuous improvement. Increase position sizes only after consistent positive expectancy and maintain strict risk controls as you grow. Once scaled, use your journal to compute win rate, average return, and maximum drawdown so you can quantify progress. If performance stalls, troubleshoot by isolating recurring mistakes. Are entries rushed, stops too tight, or is overtrading the issue? Then adjust one rule at a time and retest. This targeted fix-and-measure approach prevents compounding errors and preserves capital.
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.